Welcome to It's the Economy. Gold and silver have been the best performing asset classes in the past year. Sample this, while Nifty has given us a 13% return year to date, and that's dwindling now to 12%. Nasdaq has given 22% returns year to date. Gold has given a 32% year to date gain. And silver has soared a massive 42% year to date. Needless to add, both gold and silver, gold is at all-time highs. Silver is at what, 12-year highs. In April this year, when gold was at $2,300 per troy ounce, I happened to hear on CNBC a gentleman called Juerg Kiener who said that in his charts at that time, he clearly saw 2,600 for gold. Well, today, gold is at 2,758, and so my guest is indeed Juerg Kiener, Managing Director of Swiss Asia Capital, one of the keenest watchers of the precious metal space and indeed of business cycles. Juerg, thank you very much indeed for joining us. Well, help us understand. I mean, this gold rally is just going on and on. What are its well springs?
I think one of the well springs is really that a lot of people have real concerns about general management of the economy. It starts with governments and government spending, particularly in the Western universe of the world. And we see inflationary pressures everywhere emerging despite reasonable soft economies. They are growing, but inflation adjusted not by that much. So that means if you're looking now at investing your fixed income, you actually start realizing that you might actually have a negative return adjusted for inflation. Your bank deposits doesn't really compensate you in most Western universe anymore. So gold becomes a very good alternative because A, the volatility is so significantly lower than in the fixed income market and the returns are so much higher. So from a risk-adjusted perspective, it starts attracting a lot of investors globally. Secondly, we have at the present the BRICS meetings right now in Kazan, which is looking at how they want to restructure their economies and what's going to be required to actually move the trade forward within the BRIC countries. And one of the key ingredients in that universe is actually a partial gold backing to basically covering the trade arrangements.
Okay. Juerg, let me just look at the near term. In the past 2 weeks, we've actually seen a dollar rally, rallying, actually, if you look at it from mid-September to mid-October, the dollar index has rallied from about 100.9 to 104.5 almost. The normal logic is that when dollar strengthens, commodities weaken, including gold. But right now, that is not working.
I think, that the story that high interest rates are always negative is actually not really true. I think I look at the cycle very similar to what we had in the 1970s. We had two huge movements within the commodity, the precious metal space in a stagflationary environment, which lasted a good 10 years. And I think we are in a very similar environment today in the West. I think we just about emerged now in the first level, which basically means like the first 5 years of the 70s. And we have probably another 5 years to go in this cycle to reach tops. And don't forget, in the late 70s, interest rates in the United States used to go close to 18%, in the UK, yes. 14.5%. And despite inflation actually being well below that, the expectations of people that this cycle will continue actually was driving people in adding precious metal to their portfolios.
Oh, yes. But yeah, one remembers the Volcker times and the 18% interest rate as well. But at the moment, we seem to be getting good growth as well. The latest Atlanta Fed data of US GDP growth was 3.4%. Very good for a huge economy like that. But let me come back to just the gold first, and then we can talk business cycles. What's your forecast for the next 12 months?
Look, I think if I look at Western economies, the US economy looks quite nicely, but yes, on the back of an incredible amount of money printing. Mm-hmm. We're basically printing every, 90, 100 days about $1 trillion. To be honest, on that type of money spending, my economy is going to grow as well, 3%, right? So we don't have actually, in real terms, a very fast-growing economy. We've got an economy which is growing because we are printing money. And the gold market is sniffing it out, and therefore your price in gold will continue to climb. I think your chances to be going to reach somewhere between 2.8 and 3 by year end is quite big, and maybe 3.5 sometimes next year. And in case we're going to get an acceleration in that, which could happen depending on what happens with the BRICS independency, and when we're going to start seeing that activity to accelerate, will probably drive the prices higher going into next year.
Oh my God, this is a huge headline you're giving us. 3,000 by the year end, probably 3.5 sometime in calendar 2025. That's a huge runway you're seeing for gold. Time permitting, I'll come back to it. But silver is presenting another picture altogether. It's actually, what is it, a 42 or a 42% year-to-date gain that silver has seen. What's propelling that, and where is this metal headed?
Look, silver's been in a structural deficit for 4 years, where we had shortages, which we covered for a long, long time. And probably about the last 10 years, we've basically had a deficit of roughly about 100 million ounces each year. I think this year's been really interesting because India's been accelerating the buildup of solar panel activity for the northern part of the country. And I think the Reliance Group has taken roughly 200 million off the table on Western inventories. So the inventory levels in the Western universe in silver are collapsing, whilst we're trading roughly about 3.5 years production every day in a falling inventory collapse. It's actually a disaster. So what we actually start seeing that some people are probably on the short cover side of this trade. And so as this financial market relocates, and don't forget, we're having today silver premiums in China, which are roughly 9% higher than the Western exchanges. So that tells you that we actually have shortages. I mean, if you can buy something in London and sell it in China and make 9% gain, that's an incredible activity. And that's driving prices right now in the silver market.
So what's your curve of silver telling you? I think I've seen $50, right? In 2010, was it? Does silver get much more pricier?
So we had $50 in 1980. We had $50 in 2011. So we've been consolidating now for, 45 years? So in case we take 50 out, this acceleration in this sector will accelerate significantly. So we're not too far away of getting towards the 50. We'll probably test that. We're going to consolidate a bit. But should we take this 50 out, silver will become explosive.
Okay. Juerg, what is your reading of these metals and of business cycles if there were to be a Republican victory on November 5th, if it was a Trump victory? Do you think inflation goes up and therefore you're going to see a further spike in precious metals?
Yes, the first question I have, will we have an election? And if you have an election, will the election outcome be accepted by both sides, and will we have a peaceful resolution? And if I look at the world today, particularly the Western universe, we see stagflation. We see in Europe, basically, the economy almost falling off the cliff, with 3 largest economies basically going into deep recession, which is France, Germany, and the UK. In the US, I think it's very spotty. There's some areas which are doing very well, others not that great, but we have a huge commercial property bubble, which is basically not doing very well, which is feeding losses to the banking system, which the Fed is now covering with money printing. So we have in the West a lot of debasement of money. And so precious metals should do well. And I think as well some base metals which have been in the downdraft because of this recessionary fear. These recessionary fears get met with government spending, because government will try to make sure that GNP will stay in positive territories, at least on nominal levels. So I think most of your commodities should actually start doing reasonably well. And in case you have further military conflict in the Middle East, I think your energy market has a risk-return structure which is very asymmetric. So if you think, how much is your downside? 10%? What's your upside? 50 or 100? I mean, if the Straits is going to close, then maybe the prices might be very similar to what we have in the 70s. And don't forget, in the 70s, Europe was only coping with energy-free Sundays.
Okay. Oh, well, I'll worry about crude in another discussion. But you do see inflation returning, and therefore the rate cutting cycle looking different if it is a Republican victory? Should we,
So
what would the reading?
Your short-term rates will stay low until we have the election. The long-term already tells you that actually my forecast of inflation going to next year is much higher.
Yes, it is.
Your long end is actually telling you what they think about inflation. So by next year, I think my inflation rate will start accelerating again, and the short-term rates will not be sustainable.
Okay. So that's why your forecast of gold going, to 3,000 and beyond. What was your silver forecast, if there is one?
Look, I'm looking at 50 plus. I don't know where the number will be when it goes. I think it's going to be, it's such a small market that it's always doing very, very big numbers in a very short period. And particularly environment where the exchanges are short of basically physical inventory, the numbers could be really very high. So doesn't matter to give a number. I think people should just basically sit in it, sit tight and watch the game playing out.
Okay. Yeah, and the demand from the EV or the ESG space is not going down anytime soon. It looks like a secular demand.
There's one more interesting factor coming in, and nobody talks about military needs for silver. If you think we have a very different warfare environment where we go hypersonic missiles, each of these missiles has about 14 kg of silver in it. So military spending on silver is not in any statistics right now. And I think that number will accelerate as people are rethinking what their military structure should look like.
Okay. Well, we will have to leave it at that. We're out of time. Juerg Kiener, it was a pleasure speaking with you. Thank you very much. And the big headline coming from this discussion is that, thank you. The big headline that's coming is that we are not done with the bull run in gold, and that it can go to $3,000 even before the year is out. That's just 2 more months. Wrap up on Bazaar on that note. If you're not getting good in equities, here's gold for you. Chartbusters coming up.